business news, we're news for business people.
Good morning, you're watching All You Need to Know on Bloomberg Quint. I'm Darshan Mehta. Joining me on the show is Agam Vakil. Agam will speak about the F&O setup. I'll talk about the general trade setup. So no cues coming in from the US markets because they were shut in trade, and it's mixed cues that's coming in from the Asian markets at this point of time. The SGX Nifty is absolutely flat at this point of time, absolutely lackluster. So the Nifty is up almost 6 for the 6th day in a row, but we're failing to cross the 10,400 mark in trade. No ADR cues given the fact that the US markets were shut for holidays. Today also the US markets will be shut, so probably on Tuesday we'll get some bit of ADR cues. Crude is trading with a positive bias in morning trade. Even overnight it ended up almost close to 0.5%. The Brent is trading about the $63.50 barrel per mark currently. As far as crude is concerned, it's headed for the 6th weekly advance in the last 7 weeks. So strong traction coming in from the crude markets. As far as base metals are concerned, positive close for the base metals on the LME. Most of the base metals did well. So nickel was up close to 1%. Zinc and aluminium did extremely well in trade. Lead, however, was the only one that actually closed with a negative bias on the LME. COMEX copper is trading with a positive bias currently. Most of the commodities in China are muted. Now rubber is trading up almost 0.6%, and steel is down close to 0.5%. The other base metals, extremely muted start for them currently. As far as gold is concerned, gold trades with a negative bias for the second straight session, but the trade setup has been rather muted for gold. As far as flows are concerned, FI has bought in 73 crores in the cash market. This is the NSE provisional data. DI has bought in almost 222 crores in the cash market. Nevertheless, for the past few days, the FI buy figure has come down from 17,000 crores to 15,000 crores. The DII buy figure has gone up from levels of 5,000 to almost 7,000 crores. So close to $3 billion of funds coming in into the cash market in the last few weeks. As far as the Nifty is concerned, Nifty recovered from the lows of the day to end with a positive bias in the 6th straight day that the Nifty ended with a positive bias. What did well? Oil and IT stocks gained. Infosys was one of the prime contributors for the IT stocks. Metals and the pharma pack continues to see a lot of weakness. The Nifty was up very muted. It was just up 6 points. But what contributed? Reliance and Infosys contributed significantly. Sun Pharma moved in the second half of the trade. What caused the weakness? The HDFC Twins and L&T. Just 6 points up, Agam. But what are the F&O cues indicating?
Consolidation continues, as you already mentioned. We are looking at Nifty currently standing at around 10,350, at least in terms of the underlying, and again as flat as it can get with further unwinding in its futures. Moving on in terms of the Nifty Bank as well, we are looking at about 1.7% increase towards OI, but very little change in the banking index itself. When it comes to the WIX, again, we have seen a little bit of fall, but still very much within that range of 13 and 14, currently at around 13.9. And again, we are looking at the put call ratio move hardly to around 1.35. But in terms of changes in open interest, when it comes to the Nifty, we are looking at a lot more writing in the 10,200 and the 10,300 puts, and a little more formation of a resistance around the 10,600 level. But moving in terms of the big changes in the futures and options space, of course, we do have Fortis Healthcare and Jet Airways moving into the band. And Indocount, of course, moves out of the F&O band, so we can expect normal trade to resume for Indocount. We're watching out for SRF, which has surged and shown a lot of strength with a good 8% added towards open interest. Fresh longs building there. On the other hand, we're also looking at some amount of short covering in Apollo Tyres, where the stock moved up by as much as 2%, but its open interest declined by as much as nearly 11%. So we will be watching out for some of these counters as we move into today's day of trade.
stock of the day is AIA Engineering. Now, Jwalamukhi Investment Holding, that investment firm, has sold 12 lakh shares of the company, or 1.3% stake in AIA Engineering, at a price of around 1,446 per share, valuing the total stake at 175 crore. With this sale, the investment arm of PE, Westbridge Capital, has completely exited from the stock. It held close to 1.28% that we saw in the September quarter filings. Now, a little background about what Jwalamukhi Investment Holding is. As I just mentioned, it's an investment arm of PE firm Westbridge Capital, and the Westbridge Capital is an experienced investment firm and handles funds to the tune of around $1.2 billion. So what has led to the exit is the weak quarter, and also the management guidance which is coming in from the company. In Q2, we saw the EBITDA margins contracting, weak second quarter performance, and we saw the higher raw material prices. Currency volatility led to the poor show. Besides, pricing strategies to acquire new customers also weighed on the EBITDA margins of the company, which declined to 20% as compared to 30% in the corresponding year. Also, net profit, for that matter, that declined 23% to a number of around 87 odd crore as compared to 112 odd crore in the corresponding quarter. Management revised the sales volume down entirely for FY18. It's now brought down to 2,25,000 to around 230,000 from earlier guidance of around 245 to 250,000 for that matter. If you look at the shareholding pattern, 62% of the stake has been held by promoters, while around 38% stake has been held by public for that matter. To give you a little background about what the company is, it's a high chrome casting producer which has a market capitalization of around 5,000 odd crore. With that, let's toss it over to Saloni and bond and rupee market.
So the rupee yesterday recovered sharply by 34 paise to end at a fresh 3-week high of 64.57 levels against the US dollar. Now, the home currency strengthened after local equity markets gained for the 6th consecutive session yesterday, while bearish dollar sentiments overseas on the back of dovish Fed minutes largely supported the rupee. So far this year, rupee has appreciated close to 5%. Now, on the global front, dollar index now trades steady at 93.20 levels in the early Asian trade, while the common currency, that is euro, it rebounded sharply against the dollar after Eurozone manufacturing and services activity data jumped to its highest level in over 17 years, and it now trades above the mark of 1.1850 levels against the dollar. Now, coming back home, dollar rupee is trading at 64.62 levels against the dollar in the non-deliverable forward market, which indicates a weaker opening for the Indian rupee in today's trade. Now, moving on to bond market, yields rose for the 3rd consecutive session yesterday, and it hit over 7% intraday ahead of the 15,000 crore government bond auction today. However, it ended 3 basis points higher at 6.99%. And lastly, global funds increased their rupee debt holdings for the 3rd consecutive session. They infused close to 50 crores according to NSDL data.
Well, amongst the stocks that we're tracking includes Skipper, where the company's board has given in principle approval for the company to enter into a joint venture with an Israeli-based company for drip irrigation business. Now, the company has said that the drip irrigation business holds immense potential in India, and they're expecting this business to grow at a robust pace, and they say that their JV will become one of the larger players going ahead. But the detailed terms and conditions are yet to be disclosed, but do keep an eye out on that name. We're also tracking 2 stocks for which the earnings came out post-market. Our smaller companies, Star Paper Mills, where the revenues fell about 3.4% and net profit fell 6.4%, and the EBITDA came down about 3.7%, but EBITDA margins broadly remained around that 22.6% mark. We're also tracking a smaller company called Kesar Terminals Infrastructure, where the revenues fell 7% and net profit took a knock of about 18% due to the steep or sharp fall in the EBITDA of about 23%. The EBITDA or operating margins also fell from about 61% to 60%. And lastly, we're tracking Syngene International on the back of a bull deal yesterday, where Gowling Fund bought 0.8% stake in the company, and Steadview Capital Mauritius sold 19.5 lakh or about 1% share. So these are some of the stocks to watch out for.
PRI came out with the adjusted gross number revenues yesterday, which helps us to calculate the revenue market share of telecom companies in India. Now, according to this data, Reliance Jio, which reported its number for the very first time, was able to grab a revenue market share of close to 14% in the second quarter of financial year 2018, while bigger players like Airtel, Vodafone and Idea reported a revenue market share of close to 28.8%, 20.5% and 17.3%. While in smaller players, Tata Teleservices market share stood at 5.4%, while that of BSNL at 5%, while others, which include Reliance Communications, Aircel, MTNL, SSTL and Telenor, reported a revenue market share of close to 9.1%. Now, the top three telecom service providers in India, that is Bharti Airtel, Vodafone India and Idea Cellular, saw a sharp sequential decline in their revenue market share. Bharti Airtel's revenue market share fell by 475 basis points, while that of Vodafone India and Idea Cellular declined by 353 and 362 basis points in the second quarter of financial year 2018. Now, Bharti Airtel's market share fell below 30% for the first time in at least 15 quarters. Idea's market share, which stood at around 17.3%, was the lowest in the last 13 quarters, while that of Vodafone was lowest in at least 15 quarters. Now, the adjusted gross revenue, which is the gross revenue adjusted for interconnect usage charges and other deductions, fell for all the telecom operators except for Reliance Communications. Now, surprisingly, Reliance Communications adjusted gross revenue increased by 11% to 828 crore in the second quarter. Airtel, Vodafone and Idea saw a decline in their adjusted gross revenue in the range of 10 to 14%. Now, one positive thing was that the telecom sector's revenue increased for the first time in the last 5 quarters. Now, the sector's revenue grew by 4% to 30,755 crore in the second quarter, and this is a increase after 4 consecutive quarter declines. Now, the 4% jump in revenue is also the highest in the last 10 quarters. Now let's move on to Payaswini Upadhyay and Vishwanath Nair, who are decoding to us the precedence note to IBC ordinance.
So basically, I'm going to tell you now who all are not eligible to or don't qualify as a resolution professional, or rather resolution applicant. Anybody who is an undischarged insolvent, anybody who has been tagged as a willful defaulter by the RBI, and this is the interesting one which we should focus on, any account which has been classified as an NPA for a year or more, and there is a payment failure of all overdue amounts with interest before submission of the resolution plan. I say we should focus on this is because if from now until till there is time to submit a resolution plan, the promoters or the existing promoters pay this overdue amount with interest, they will be allowed to submit a resolution plan. Coming to the fourth ineligibility criteria, anybody who's been convicted for an offence which is punishable for over 2 years of imprisonment, any disqualified director under Companies Act 2013, anybody who has been barred by the SEBI, the markets regulator, from capital markets, anybody who has indulged in preferential, undervalued or fraudulent transaction as per the NCLT or any judicial order, and anybody who has executed or given an enforceable guarantee to the creditor in respect of a corporate debtor. So, for instance, if X is the corporate debtor on the company facing insolvency proceeding, and SBI has given the promoter an enforceable guarantee in terms of that corporate debtor, and that guarantee has not been executed, even that X person cannot be a resolution applicant. And finally, any connected person, and that connected person has also been detailed, and those people can also not submit a bid for an insolvent company.
Now that the promoters are out of the game, now that some of these people who could probably influence the whole resolution game, they are out of the game. So it makes the banker's job much easier. They can go seek bids from people who are impartial, who are third party, not connected parties at all, and who will be able to give them a better valuation of the company depending on the company's ability to pay back. So that is obviously a kind of a very positive method. We've seen what R. Gandhi, the former deputy governor of the Reserve Bank of India, said, that there's going to be this entire ordinance is going to force promoters to try and resolve this matter so that the case does not end up in the NCLT for IBC proceedings in the first place. We also talked to VG Kannan, the CEO of the Indian Banks Association, who said that the promoters will have a very short window to try and regularize their payments before. So the promoters have a time before their resolution bids have been submitted, so that they can ensure that the payments are regularized, and therefore they don't have to face any of these criteria that Payaswini had laid out for us. We also spoke with G. Padmanabhan, the non-executive chairman of Bank of India and also a former ED at the Reserve Bank. He said that the people who have been trying to play the system in all of this time, they will be taken care of. They will not be allowed to participate in this whole process, and therefore the sanctity of this whole process will be ensured.
There is a lot of interest in these assets, so it will not bring down the valuation. Let us be very clear, because this valuation has nothing to do whether existing promoters are allowed to bid or not allowed to bid. The asset will go only on its fair value of the enterprise.
He can, if he pays overdue amount, which is basically not necessarily principal, the full of entirety. There may be a portion which is still due in future. Unless it is accelerated, unless all of it has become payable immediately, then there is no chance whatsoever. But if only a part of the overdue amounts, as in principal or interest or cost, which are usually part of a legal notice, if that is quantified and the promoter pays up that amount, then he has a scope of going under a resolution plan and seeking deferral on the basis that I want the company to be viable.
Well, what the Apex Court has done is that they have ordered a fresh round of auction for the Ambi Valley property of the Sahara Group. They have also appointed the official receiver, which will coordinate with the official liquidator of the Bombay High Court and the company judge, who have earlier, by court's order again, were asked to look after the auction process and ensure that it goes on smoothly. Now remember, this order to auction the Ambi Valley property is in furtherance of an earlier court order where Sahara Group was ordered to pay above the tune of 40,000 crores to the investors. The amount of the money which would come from the Sahara Group would first be deposited to the SEBI Sahara account, and the money now, once after the auction is, as and when is complete, will also be deposited in the SEBI Sahara account. There were also some pretty harsh words coming from the Supreme Court to the Sahara Group. The Chief Justice of India led bench again warned the Sahara Group that if any obstructions are created in the auction process, they will send Mr. Subrat Roy to jail and end the whole SEBI Sahara case. That is what came out from the Supreme Court. These two major developments: one, fresh round of auction starting from December, and second, some pretty harsh, strong warning for the Sahara Group and Mr. Subrat Roy.
On brokerages, first we have a CIMB on Hindustan Zinc. Now they have initiated coverage on the stock with a reduced rating and a target price of 251, which suggests a potential downside of 20%. Now according to the brokerage, zinc demand supply balance could turn to surplus in calendar year 2018. Now on the back of this, they are saying that the zinc fundamentals are weakening, and given the surplus prices could also fall in the calendar year 2018. Now Hindustan Zinc's FY19 EBITDA growth will decelerate as volume growth will be offset by the price decline. Now they're expecting the metal production to grow at a compounded annual growth rate of 8% over FY17 to 20, but they're expecting the EBITDA to grow at 6% and 4% in financial year 2019 and financial year 2020. Now they're expecting the company to remain in a net cash position in financial year 2018, 2019 and 2020, and on the back of this, they're saying that the dividend per share will remain at elevated levels of rupees 25 per share for financial year 2018, 19 and 20. Second we have is Motilal Oswal on Bata India. Now they have downgraded the stock to a sell rating from buy, but have maintained the target price at 578, which suggests a potential downside of 23%. Now they have downgraded the stock on the rich valuations that Bata India hold as of now. Now in the first half of financial year 2018, GST had netted off the top line, and they're expecting a growth of around 6% in the second half of financial year 2018 compared to last year. Now they are saying that going forward, premiumization will support the margin expansion, and they're expecting the margins to expand by 70 basis points and 100 basis points in financial year 2018 and financial year 2019. Now they're saying that the company's store expansion is on track, but the same store sales growth has been muted for the second quarter. Now for the second quarter, this SSG was around 4%, which brought down these SSG for the first half of financial year 2018 to 6%. Now they have cut the revenue estimates by 4% and 6% for financial year 2018 and financial year 2019 to factor in the weak first half of financial year 2018. However, they're expecting the company's revenue and net profit to grow at a compounded annual growth rate of 9% and 19% over FY17 to FY19.
Well, there is a lot to talk about over the course of the day, and you'll find all the live action on Bloomberg Quint. There are also a few stories that you should consider reading on the website bloombergquint.com. Here they are. Lotte has decided to acquire 100% stake in Havmor Ice Cream, and the company said in a statement, post-acquisition, Lotte will start its ice cream business in the Indian market. Swissquote Bank, I say, upped its cryptocurrency game with the release of an exchange-traded product that will attempt to curb volatility by switching holdings between Bitcoin and dollars. And the Switzerland-based online trader called its offering the first actively managed Bitcoin certificate. And Prime Minister Narendra Modi will address 8 rallies on November 27 and 29 in different parts of Saurashtra and South Gujarat, where polling for the first phase of the assembly polls will be held on December 9. Well, those were, of course, the top stories that you can keep an eye on, but let's also listen in as to what Mahesh Joshi of Angel Broking has to say on the stocks that he is betting on.
So few of the auto ancillaries is something that my belief is that should do well, with auto volumes expected to probably stabilize over the next 2 quarters and improve thereafter, assuming certain SOPs coming through into the budget. And again, I think that will lead to a lot of leverage for the original equipment manufacturers as well as the replacement market in general. So I think Minda Industries is something on any decline, a staggered way of looking at this stock can be looked at. The management has made it clear of 11-12% kind of an EBITDA margin, market leadership position in switches, its number 2 position in electronic horns, and the kind of foray it is making in terms of providing more content, whether it be for 4-wheelers or 2-wheelers. My own sense is that the earnings growth that the company has displayed over the past few quarters and years can very well continue, and that can have a multiplier effect, as I said, on the return ratios. At the same time, I think Endurance Technologies is also a very interesting play. Again, the castings business is something which has been gone down drastically to 40-42%. It is getting into the 4-wheeler aluminium casting space, specifically for its overseas operations, which account for 25%. And again, I think the kind of cash flows that this company can derive, it's generated around 1265 odd crores over the last 5 years, but expecting it to generate around 1,100 in the next 2 years itself, which will make it debt-free. So again, very, very interesting in terms of what an earnings this company can deliver over the next 2 years. So any significant decline on this counter as well should start as a good buying opportunity.
And with that, it's a wrap on this edition of All You Need to Know. Indian Open is coming up next.